Well, to the markets now, and the first day in the red for 6 sessions. Iron ore prices close to a 10-year low kept miners under pressure, and the big banks were on the back foot. Across Asia, Japan was playing catch-up after Monday's public holiday. The Chinese market slipped, and the Australian dollar is treading water at around 72 US cents. Well, with commodity prices still falling, the big analyst houses are revisiting their earnings forecast for miners, and it's not pretty reading. UBS is the latest out this morning and models the impact of current spot prices on next year's results, not just for the big boys in iron ore, but for everything from nickel and copper to mineral sands. It finds South 32 would be looking at a loss. Rio and BHP's earnings would drop 70 and 45% respectively. Well, Roger Montgomery from Montgomery Investment Management is with me in the studio. And look, Roger, is the sort of time for the chickens to come home to roost, really?
Well, we've been talking about this for a number of years. We warned that this would happen 3 or 4 years ago. It's not over yet. So there are many fund managers at the moment trying to pick the bottom in this particular cycle. It's got many years to run. If you believe some economists, we'll never see a boom like China's boom ever again. And I don't think that's necessarily the case. But yes, they're coming home to roost, and there's more to go.
Right. Will the big miners be facing problems from Paris climate talks, do you think?
Look, there's certainly going to be some impact, but I think the bigger impact comes from the commodity prices actually falling. So there's a long way to go there, and that's where the bigger impact is.
OK. Well, let me move on to a rather different company, and that's Transurban, who has just picked up the airport link M7 in Brisbane, a snip, I understand, at $2 billion, given it's half of the build price, and a nice little deal for Transurban. What do you make of it?
Well, let me say this, and it ends the controversy surrounding Bris Connections, and there's been a lot of controversy around Bris Connections, but it doesn't mean that the warnings are over for investors, because while Transurban picks up the asset cheaply, they're also issuing shares at an expensive price, and so the warnings remain for investors.
Okay, so you know, given the history of that,
yes.
I mean, it was
incredibly
a long
controversial,
and a big lesson, really.
Controversial
wasn't it?
For investors, controversial from Macquarie Bank's standpoint, controversial from the government standpoint. You know, there were government employees who were involved and given holidays at various homes of CEOs that were involved in the bid. So the controversy there is over, but in an interest rate environment that is likely not to see rates going any lower, the chase for yield, which has seen infrastructure stocks benefit, such as Transurban, means that their shares are very, very expensive now. And despite the fact that they picked up this asset rather cheaply, it doesn't mean necessarily that investors are going to make off with a whole heap of money buying at these prices. And
finally, Roger, everything okay at Woolworths with Roger Corbett back, do you think?
Let me say this, when management with a reputation for brilliance gets involved with a company with poor economics, it's usually the company's reputation that remains intact.
Roger Montgomery, thank you very much for joining us.
It's a pleasure.